Hello everyone, I'm Shivang Mehta. In this session, we are going to analyze Veranda, an educational edtech company. As you know, edtech industry is growing very fast in our country and has huge potential. So our Veranda is coming up with its IPO. So let's go ahead and analyze this IPO. Before we get started, please subscribe your shop channel for analysis of new bonds, NFO, NCD, IPO, ETF, and many more. Also visit yourshop.com and use coupon code YO100 for flat rupees 100 discount on all products and free 1 year GST and ITR e-filing services. So let's go ahead and know about more about this IPO. So Veranda incorporated in 2018, Veranda Learning Solutions Limited offer online and offline coaching services for career-defining courses such as UPSC, CA, banking, government exams, graduates, professionals, and corporate employees. The company offers coaching services for railways, recruitment board exams, banking and insurance exams, state public service commission, staff selection commission, CA foundation, intermediate, finals, Union Public Service Commission, prelims, main, personality tests, and State Public Service Commission, and various more exams are offered by this IPO using its several subsidiaries with specialized courses in under every subsidiary. During the 9 month period of December 31, 2021, a total of 42,000 students and professionals enrolled in the courses. So you can make out the growth and the scale of this company, out of which 16,000 enrolled for the offline and 25 enrolled for the online courses. So company is a omni-channel education service provider with both online and offline. Company financials, if we see company's assets has drastically grown from March 2021 to September 2021 as per its draft red hearing prospectus, from 115 crore to total assets of the company has gone up to 3,073 crore. This is due to the raising, mostly due to the raising of the fund, and the change is also seen in the revenue with almost six times growth in revenue from 25 crore to 156 crore over a period of 6 months, and same changes is seen in profit after tax. Companies loss making company has and losses widened over a period of 6 months from March 21 to September 2021 by 100 crores. Objectives of the company: so repayment or prepayment in part or full of its certain borrowings. So company has borrowings over 100 crore rupees. So company wishes to pay back a part of that borrowing. Payment of acquisition consideration, Utreca, or repayment of bridge loan availed specially for the purpose of discharge of such acquisition consideration of Utreca. So company is also considering to pay off the short-term loans taken to acquire a Utreca, a firm, for its inorganic growth and other growth initiatives and incorporation of technology and faster growth of the company. Rest of the proceeds of the IPO will be used. Coming to the IPO details, so IPO will be opening on 29th of March. It will close on 31st of March 2022. Basis of allotment 5th April, initiation of refund 6th, credit and share to demat on 6th April, and IPO listing date is 7th of April. So issue type is book building issue, face value of rupees 10, and IPO price will be 130 to 137 per equity shares. Market lot is rupees Market lot is 100 shares. So as you know, in small cap, micro cap company IPO, you have to subscribe at least 200 shares in a lot. So listing will be BSC and NEC, and issue size will be of 200 crore, and qualified institutional investors has 75% of the net offer, and retail investors has does not have much to make profits from, with 10% of the net offer. HNI or NNI has 15%. So if you buy one lot, then it will cost you around 13,700, and maximum as a retail investor you can buy 14 lot costing 1,91,800 rupees. So pre-issue shareholding, so promoters own 89% of the company, and post-issue shareholding has not been announced by the company. Coming to the strengths of the company, so proven track record of company products. So company promoters, so promoters has been committed to the educational sectors and has given consistent results over a period of time. result-oriented method of teaching with 360-degree approach. So com- company has a very systematic and scientific approach of teaching with a with its a personalized module system and a system in which a overall growth of the student for the need of particular exam take place. So diversified course offerings and delivery channels, as we have seen, company has two delivery channels, offline and online, and diversified course like CA, government exams, UPSC, and many more. Extensive experience in education, business, and professionally qualified human capital. So company's human capital is one of its most important asset when it comes to education sector, and company has enough qualified human capital, strong brand presence of our brand. So company has various brands, and it has strong brand presence in small pockets of the country, but it is still to enter large markets such as urban markets or metro cities. Efficient infrastructure and resource management with strict quality control standards and affordable courses. The company keeps in mind the affordability and also keeps a strict quality control standards about the maintenance maintenance of the education system in its institute. Technology driven asset light and scalable business model. So company says that it has technology driven asset light model which does not need you know upfront investment or high working capital requirement. It does not have pandemic proof model. So since it runs most of the business online, so it is pandemic proof or any education any health calamity proof model. Risk of the company. So competition, one of the largest risks. So company faces heavy competition from likes of Byju's and Academy, which are dominant player in the Indian ed tech industry and heavily funded to disrupt market. So company has very high risk from these players. Company has weak fundamentals as company has not created real value for shareholders till now, and loss is widening year on year. Therefore, company sustainability is the issue. The company as at this point of time is you know focusing on growth and diversification, and acquisition of market share instead of creating profit. So company's loss is widening at this point. Company faces serious possibility of takeover anytime in future by large edtech players who believes in inorganic growth of business. So large edtech players like Byju's, Academy, Upgrade, these these companies are famous in the corporate for taking over small companies. So company might be taken over as well in the future. So company lags behind in technology and does not include artificial intelligence, virtual reality like Web 3.0 technology in its ecosystem. So companies like Baiju, Upgrade, and Academy has taken one step further with including high tech technologies in its educational offering, while Vedanta has not taken any such initiative in its education ecosystem. Company growth is limited to rural areas as students in urban areas are not now more attracted towards technical high tech jobs. So companies main offering are towards competitive exams and does not prepare company for high tech jobs. This is also the risk for the future growth of the company. Potential of the edtech industry. So edtech industry, is growing at 39.77% compound aggregate growth rate for 2020 to 2025. By 2025, the edtech industry will be around $400 million in India. Indian edtech industry by category, if we see, learning 1%, reskilling and offline certification market share is 23%. Test preparation, where Vedanta is one of the specialists, the market is 27%. Higher education is 9%. Coming to the funding and key players, so key players are Baiju, and Academy, Vedantu, Topper, and Upgrade. They hold you know majority of market share in Indian edtech industry and are showing strong growth and sustainability and strong wealth creation possibility in future. Edtech funding in India. So from 2020, edtech industry has been funded $1.4 billion till now, divided mostly 50%, about 50% has been funded to likes of dominant players like Baiju. The most fundamental question now is, should you invest in this IPO or not? So considering the weak financial fundamentals, lack in technology adoption, inability of company to expand in urban areas, and consuming competition from likes of Byju's and Academy, etc., it is recommended to avoid investing in this IPO. Company does not have any ability to create long-term wealth creation for investors, and listing gains are also not expected due to aggressive monetary policy and lack of high access liquidity in the system. Moreover, capital market are volatile due to geopolitical tensions, so listing gains or the expected lines of investors are not to be met when it comes to listing. And invest in IPO is suitable for those aggressive institutional investors who might invest in short to medium term and may benefit from possible takeover of business by market giants. So any aggressive institutional investors can invest in this IPO, but this IPO is not suitable for retail investors. So now you should consider your long-term wealth creation vision and risk appetite, and should decide to invest in this IPO or not. Thank you.